Thank you so much for your time.
Not at all. I just realized I was on mute without my camera on. Hey,
Take it away.
I am super curious if there are some CPG people in the audience, or if it would just be super helpful to know what. Okay, I love it. That's super helpful, and maybe give me a reaction if you're also just getting started in your fundraise. Okay, or you raised a few million. What's that look like? Congrats. Okay, that's awesome. So there's a nice mix. Well, nice to meet you all. Thank you. We'll try to keep this really fun and as entertaining as possible, given that you've been on 2 days of Zooms, but this is a pretty fun crowd. I'm Alexa Vins with Halogen Ventures, and I don't know if I knew how to, here, moving through the slides. The thing about Halogen Ventures, our shtick is that we invest in women. So generally early stage, that means pre-seed, seed, a little bit of Series A, and there's generally a consumer element. So you'll hear the phrases B2C, meaning the customer is paying directly to the startup, or B2B2C. Some of our companies, the ultimate user is a customer, but we look for some technology. So even if there's a CPG element, we'll see patents or trade secrets, and generally huge markets. We're looking at the first mover, second mover in a market, and it's got to be a giant, giant idea. And as an all-female team, we have invested in all-female founders. We've got a few male CEOs in the fund. The idea is that there's at least one female founder in every team that we invest in. And as a result, we've also seen that means diversity on a lot of fronts. So half of our founders are BIPOC. We've got women ranging from 16 to 65. Yeah. Here's a couple of our wins so far. P&G bought This Is Elle, an organic tampon company. Walmart bought Eloquy, the plus-size clothing company. Squad is a teen screen sharing app, so you could hang out with your friends during COVID, and it was acquired by Twitter. And the hugest advocate for our founders is my boss, Jessie Draper. So Jessie started Halogen about 5 years ago after she'd been sending really amazing, awesome investment opportunities like Facebook to her father, Tim Draper. She said, why am I sending all my best deals to him? I know how to do this. So she raised her own fund. She hired me for fund too. The whole Halogen team is so lucky that Jessie has decided that this is sort of her mission to invest more in female founders, because she's given us a place to do our work. Jessie has incredible leadership qualities. I'd say my favorite thing about Jessie is she's a media personality. She started her own TV talk show. So often she will be on the news talking about our portfolio companies. And as you can imagine, that's just an awesome megaphone. The rest of the team, we are small but mighty, just like Pilar, who spoke last time. My background, I've developed some product lines for Target. And before that, I worked on big public health campaigns for MTV, Univision, Fox, BET. I started angel investing by investing in companies that I knew were going to get access to target buyers through me. I introduced them. And once I knew they had shelf space, I made some angel investments. So that's the case with Mented Cosmetics, Flex, a tampon alternative company that now has superseded the Diva Cup. That's also known as the Soft Disc, whichever brand you might have heard of. It was a nice sort of like insider trading that I knew I was making these angel investments before they were going to be nationwide in Target. My colleagues, Ashley Ramirez and Jennifer Mandelbaum, are all fantastic marketers. So each of us sort of, our value add to founders tends to be on the marketing front. I come from product development and marketing, so developing products for Target. Ashley comes from PR, having been at iHeartMedia. And Jennifer is a just killer market intelligence. So she's our adult analyst, among many other things, and did M&A at Shiseido. A nice combo of skill sets. So what founders lean on us for tends to be that marketing piece. Understandably, it's what we all have a lot of operational experience doing, but often it's hiring support too. Financing is a big one. We try to invest early and follow on at least once, but that means that we are constantly helping our founders fundraise too. And generally, it's a sort of 24-hour hotline. So we consider ourselves a red phone. Here's a look at a couple of the key categories that we've made bets through Fund 1 and Fund 2. Just like Pilar, I think we probably have hit our max on some of these categories, and that's why it's important to know where investors have already made some bets, because they are just looking to diversify and spread the risk. What would be fun to hear about? I don't know. It's like picking your favorite children. Obviously, I love them all equally. A really one that I'm particularly proud of is Blue Fever, and this is a retail tech enablement product. So Blue Fever is basically helping teenage girls be less stressed out during COVID. So if you have any 12-year-old, 14-year-old women in your life, it's sort of like a journaling social community, and just one we feel really good about right now because everybody needs better community. Oh my gosh, there's so many. We'll move on. So something I thought that would be a helpful use of time here is to go through a couple of the really common reasons why VCs will pass on a deal. And it's not a question of if, it's a question of, they will pass 99 conversations, and like 95 will pass, and 4 will be your winners. So I wanted to talk about what you can do about it. What are some of the things you can do to sort of balance out these really common reasons to pass? The first is we are fundraising ourselves, and Halogen's in this boat. So we are between funds, and what that means basically is we're not actively writing checks. So a really simple way you can address this is you can, first of all, ask, where are you in your fund cycle? And often people will say, oh, we're just getting started. And that means they have tons of money to deploy. Or they'll say, we're just wrapping up. And that means they hit, they're going to make 1 or 2 more bets in this fund. If they're fundraising, I think the best thing to do is stay in touch and use that time to build a relationship so that the minute they do have capital to invest, they think of you. And it's sort of helps things stay low stakes, right? Like those early meetings if people aren't fundraising. Next, I'd say we don't invest in ABC, or we already invested in ABC. The key thing we do with all of our portfolio founders is we make a really targeted list of VCs each time they're out raising, pre-seed, seed, Series A. And we organize those targets based on the stage they're at, that's pre-seed or seed or Series A, the sector, potentially they invest in hardware, potentially they invest in consumer, and their just general expertise, and also any competing investments. And it's a really helpful tool to make sure you're not wasting your time, because you could get 1,000 VC meetings, but if they're all with SaaS investors and you're making a hardware product, they're all going to say no. So some quick tricks: you can use Crunchbase to identify companies that have the same business model as you, but are not directly competitive, and see who their early investors were and say, I saw you're in this, I'm this for that. Another way to help build out that list of targeted investors is NFX has a database called Signal. Another reason VCs will often pass is the team's skill set does not match with the product that they're getting pitched. So often this is a lack of a technical team member. So if what you're pitching me is a mobile app and nobody who is on the team has the technical skills to build a mobile app, that's a disconnect. And you can generally raise upward, like pre-seed capital, maybe seed capital, using external developers. But the truth is, eventually you're going to have technical teammates, and it makes sense. It's like it's not when you are going to change your product. It's like you're definitely going to change your product. And so you want the people on your team to be able to stay up at midnight with you, making those iterations. You don't want to have to shell out for every small feature update. It's just not the way that technical companies are being built today. So it's one way to get started, but it won't get you all the way. Fourth thing that they may say as a regular pass is, this is a lovely, cool product. I can see why customers buy it, but this is not a great business. So when you're pitching, it's almost like shifting your audience. You've been talking often maybe to customers, and so you've been talking about all of the amazing qualities why your product is better than the other product. But VCs are not comparing one product to another. We're comparing one business to another. And so the best thing you can do to get them over the line is not convince them that your product is the best. It's to convince them that if they give you money, you're going to make a ton of more money back for them. Think of it as speaking to like a banker for a loan, right? Like my job is to take other people's money and multiply it. And so I want to see that this business has really good unit economics. And when I invest X, I'm going to make Y. The last thing I'll say about why VCs pass is the business that you've presented just maybe isn't that big. And so I want to walk through really quickly VC economics so that you can understand it's not necessarily like a lack of belief that what you're building is awesome and works and matters. It's maybe just a little small. So VC economics only makes sense if you plan to IPO or to sell for hundreds of millions of dollars. So before you seek VC funding, just be honest with yourself. How big a business do I want to build? And if you want to IPO / the backup plan is build a $1 billion private company and try to sell that, that's when you should be knocking on VC's doors. So here's the economics. The minute you raise $2 million in VC funding, say it's at a 10 million valuation, your early investors like Halogen, we're aiming for a 20x return on that for our limited partners. So it's a fail for us unless you sell for over $200 million. And that's only raising $2 million. The minute you go and on a tear and raise $20 million, now maybe your valuation's up to 100 million. Those investors, our follow-on investors, the Sequoias of the world, they're only going to be happy if you end up being worth well over $1 billion. So if your business realistically can get to $1 billion big, VC is appropriate. But if what you have envisioned for your life and the future of this business sort of like really gets you to like a healthy $20 million valuation, you can own that whole thing, finance it with debt financing, and be a killer entrepreneur who never had to use any VC funding at all. The same thing happens with founder economics, that you just get diluted and diluted the more equity you raise. So you really just want it to make sense that you're taking VC money, that you kind of look at the end and work your way backward. One more slide. I happen to run our Halogen Fellowship at Halogen. It's a summer program for undergraduates. If you have any family members who are in college and interested in doing an 8-week program learning what it means to work in venture capital, they shadow me on my day-to-day on Zoom. We have 10 fellows every summer, and the idea is to help just change the face of venture so everybody gets a chance at working in this industry if you didn't have the good fortune to be able to make angel investments like I did. All right, how'd I do on time? 3 minutes over. Sorry about that.
No, you did fine. This is great. Perfect timing. Perfect timing. Thank you so much for that insight. Honestly, it was very helpful because a lot of times we're like, did they pass on me because of X? Did they pass on me because like they just don't like me? No, sometimes it's because our business model is shit. And it just, as an ex-founder, it took me some time to realize that at one point. So super, super insightful.
For sure. I'll often ask a founder, how did a pitch go? And she'll say, they said X, Y, Z. And I'm like, it's just an excuse. Mm-hmm. They met 100 companies that month and you're not their favorite.
Right, exactly. So I love it.
So sometimes it's not even a good reason. It's just that they met another company that is, for whatever reason, an 11 out of 10. And
Yeah.
you're a 10 out of 10.
No, it's not a pretty game. So it's not a pretty game at all, but we love the transparency. So thank you.
Totally.
All right, we got some great questions. Ooh, yes, a lot of questions. Okay, first question. When should founders seek angel investors versus VC funding?
Yeah. I love working with angel investors. They take a little bit longer to come to a decision because they're not full-time doing this. They're grandparenting or they're doing whatever they're doing. But angel investors are generally so committed. So despite the fact that the check is small, they are rooting for you, and it's almost like disproportionately that you get a whole nother person helping support your business, even though they're a smaller check. So I'm a big fan. You have to be a little patient, and it's much more about like aligning on personalities, I think.
That's true. That's very, very true. Let's see. What categories are you no longer looking at anymore?
Yeah, great question. This is such a cool setup to have your question here, Jordan. So I am going to try to rattle off some of these things but I won't have the numbers quite right. A lot of people are like, why is that company getting that valuation and I'm only getting this valuation?
Right.
Sometimes it has to do with the category that you're playing in. So at the end of the day, companies are judged on multiples. Your valuation is some kind of multiple of either EBITDA or revenue. And if you look today on like Amazon, I think it's trading at like a 3x, and something like Blue Apron is maybe trading at a 1x revenue. So where we are focused and where a lot of tech investors are focused on the categories that have the biggest multiples. That's going to be in biotech. That's going to be in fintech. It's going to be in all things enterprise SaaS. The CPG space, beauty's like a 3 or 4. Apparel's not doing great. It's valued right now at about a 2. So sometimes if you're just comparing like apples to oranges, it feels like you're beating your head against the wall because you're saying, why are these other people raising money so much and why are their companies valued at what they are? But it might be the category you're playing in. So we similarly want to have a couple bets in some of those really hot categories.
That's great to know. That's very, very insightful, especially on the tech side, because a lot of times like we as first time founders, we're just not sure like why is this type of company getting funded, but there is a science behind it at times. Majority of the time.
And everything, even once you go public, valuations are just they're just based on what people are willing to pay. And so if you can turn yourself into a super hot company that's just everybody's dying to get in, you can be better than the average multiple in your category, but it's often how people price things is they'll say,
right.
oh, well, your revenue's here, so we think a fair valuation is here.
Right. Question that Jordan had is, do you prefer warm intros or cold email pitches?
For sure. Absolutely. I think the industry prefers warm intros. I think it's nice to have context of like how somebody knows that person that you have met before. But I will respond to every email I get.
I love that. What is your best advice for founders of service-based companies who are in their MVP stages that plan to scale through a tech platform to ensure that their company pathway is highlighting the right information?
Yeah. A mix of services plus tech is going to require a certain kind of investor, because a lot of people will just pass because they're only interested in straight tech. Services are lovely because you have money flowing in. Why would you not want to have a services component of your business? But that's where I'd say angel investors who potentially are more interested in seeing profitable growth than growth at all costs. It may be an angel investor who has built their own career by running a really successful agency or services business. Tech-enabled agencies are going to be valued, like we were talking about the multiples, as a mix. So you literally take how much of my revenue is coming from the kind of automated side of the business and how much of it is human capital, and you multiply them by the separate multiples. So they tend to get a little bit of a haircut because a lot of the scalability comes from more human capital.
Got it. Human capital is super important.
Right.
Super important. Of the industries that you displayed, which industries are you maxed out on, and what direction are you looking to invest in with the next fund? That's a great question.
Yeah. Well, we will do a lot more, I think, in femtech, which is really fun. I think there's so many female experiences that we just haven't really made great yet. There's a lot of room for improvement. So those are two where, with the sale of This Is Elle and the Flex Tampon Alternative Company, I think we've got a track record and we'll continue to invest a lot there. Apparel, I don't think we'll do many investments in apparel. And that's very much based on that sort of multiples finding. The like money in, it just doesn't get multiplied very well. I was reading a book about like what money you can put into a home refurbishing. And if you put $1 into your kitchen, it only increases the value of your house by $1. And if you put $1 into a new bathroom, it increases it 2x. And so it's just like that mentality of like, okay, if we put our money here,
right,
it just doesn't have the potential to grow as much as if we put our money here.
That's a great analogy or a great comparison. I didn't like that. That was great. Very clear. Last two questions. What is your top piece of advice to founders seeking funding from VCs?
Yes, have a deadline. I'm in fundraising mode too, and it's so hard to do this because it feels like you're pushing somebody out, and maybe if you're more patient, they'll give you money. But if I have the idea that I can call you at any time and get money in, there's no reason for me to come to a decision today. But if you create windows of opportunity to invest, so I'm raising X amount today, I'm closing on this date because of XYZ, you just make up, you've got a big LOI coming, so you got to like close in order to hire a couple more engineers or something. I know I need to make a decision. And that doesn't mean I'm not still interested. Maybe the idea is like, I'm an angel investor. I'm not sure I'm going to be able to take enough of a deep dive on this. So I'm going to pass on this round, but I'd love to look at the next opportunity. You need a deadline so that honestly, people come to a conclusion.
No, that's true. And the last final question, super, super quick. How can our founders find you? What is the best way to submit their pitch deck or get in contact with you?
For sure. I'm Alexa at halogenvc.com. And like I said, we're fundraising right now, so we don't have any capital to deploy, but share any information you have about what you're building, and then you're at least on the radar, and we've got a relationship, and maybe 6 months down the road, we'll be deploying capital.
Amazing. Thank you so much, Alexa, for your time and your energy. We appreciate your insight, your transparency. Sure. We look forward to seeing you close your round too.
Thank you. Everyone's fundraising.
Always fundraising.
Thanks.
Thank you. Next up, guys, we are going to introduce our last and final speaker. I know we don't want it to be over because the vibes are just that good. However, next up, we are going to have Benjamin Van, founder and CEO of Impact Ventures. Sit tight. A couple vibrations from DJ 4.0. Sit tight, and then we're going to get started shortly.